G'day guys. As you probably heard, Westpac were recently the victim of a large corporate fraud in the order of $285 million. This surprised nobody and annoyed me so much that I started recording this video without even wearing a cat-themed t-shirt. Be right back. Alright, I'm back. Cat shirt. So anyway, recently the fine folks at Westpac were the victim of a large and elaborate fraud, to quote the Financial Review. I don't know if I agree it was elaborate, it was pretty basic. But anyway, what I think we should do is we should do a breakdown of how this fraud took place, why they got away with it for so long, and why, on top of the other Austrac debacle and other problems Westpac's had, they shouldn't just give up their banking license and go sell bananas. Because frankly, to be honest, they might f it up. What's going on here? Well look, firstly, I don't want to dunk on Westpac, because this problem is more systematic of the Australian financial sector and large banks in general, and to a lesser extent, large corporations. It basically comes back to the theme that large corporate institutions are unable to innovate by nature of their structure. And this is why you see such shit products coming out of large companies a lot of the time. But back to the Westpac point. So again, to make myself clear, I'm not trying to dunk on Westpac exclusively. They just by pure coincidence seem to have these things happen all the time. Now look, let's just get some biases out of the way early. I'm an ex-Westpac business banking employee. I had a great time there. All the staff there are awesome, except for this one guy who said I was a bully because I called him a homie. Anyway, I'll tell that story later in the piece. So, let's break it down and get into it. If you enjoy hearing me rant about all the reasons why large companies can't innovate and are destined to fade into nothingness while new players come along and take them over, please feel free to subscribe, like this story, and leave your comments below. Because my opinion is this probably won't be the last we'll hear about this style of fraud, both within Westpac and within other large banks. So the easiest way to get an intro into this situation is for me to read a brief snippet from a recent Financial Review article that covers it really well. It was late May that Westtrac's Perth-based Treasury Manager, Carly Rosbach-Smith, spoke on the phone to O'Brien about a large contract that needed funding, $50 million to be precise. When he looked up Westtrac on the internal system and told her how much they'd already borrowed from the bank, something didn't add up. The system showed that Westtrac had used almost $10 million of a $12 million facility. Rosbach-Smith, somewhat perplexed, replied, "That level seems high. I'll check and get back to you." So, let's talk about how this whole thing went down. So to take a step back, you need to understand that there's multiple levels in a bank that have multiple different ways they function. Think of it as a hierarchy of fat cats, if you will. So, the bottom of the fat cat hierarchy are retail bankers. They're the guys you go to if you want a home loan or a car loan, or you just want to go in the bank and abuse someone because the ATM at the casino didn't work. Now they're the lowest tier of fat cats. Perhaps normal cats, if you will. Above them are business and commercial bankers, which is where I worked. We're like a medium level fatness of cat. So like a well-fed house cat, basically. You know, he's kind of plump, they're fairly fat catty, they have some level of discretion, higher levels of lending, they're generally left alone, we don't get abused quite as much. Now the top tier of fat cats are the institutional bankers. These are the boys and girls that look after the high level customers like BHP, Rio Tinto, Coles, Woolworths, things like that. They are truly the fattest of cats. They're like, Keith, I think his name is on social media, he's this obese house cat. They're all Keiths. Not literally, metaphorically. So this fraud took place in the institutional bank division, surrounded by the fattest of cats, the highest paid of cats, the most cat-like cats. So basically what happens if you're a large institutional customer, like Coles or Woolworths or someone like that, is they don't just do a loan every time you need a new car or a new vehicle or new equipment, right? Because those guys are turning over hundreds of bits of equipment every single year. It just wouldn't work if every time Coles needed a new i30, they had to ring up the bank and go through the process. So what they do instead is put what's called a limit in place. So they sit down with the bank and they go, right, this year, we're probably gonna need to borrow like $30 million worth of equipment. The bank says, all right, we'll do one approval for $30 million, and every time you buy a new thing, just send us through the invoice and what you're going to do, and we'll just pay it. It's a fairly standard function within institutional banking. It works quite well, and it just makes things more efficient. So, on the side here, there's this other company called Forum Finance, which basically were like a broker and manager of finance and equipment contracts for large corporations. So these large corporations, this particular example I think was like waste management equipment and trucks. So they need to get these waste management trucks all the time. So they go, hey, Forum, we need 3 more trucks. And they go, all right, nice, mate. They come in, they bundle up the 3 trucks, all the paperwork, they send it to the bank. The bank pays Forum the money for the trucks. Then they manage the leasing process with the customer. So basically they just, Woolworths, let's say, only has to pay Forum Finance 1 payment every month, and they sort the rest out. What it looks like was going on was the CEO of Forum, Bill Pappas, this sneaky was just making up contracts and being like, yeah, this guy had 7 trucks and 3 dump trucks and some bins. Yeah, no worries. Look, he signed it. Here you go, and sent it to Westpac. And Westpac are like, $10 million. Yeah, no worries. Paid it to this Bill Pappas guy's business account. And then he was supposed to manage it all. But he just took the money and kept it. And then he made lease payments on it to like keep up appearances. But he made those lease payments by making more fake loans to pay those payments. So there's no trucks at the end of this. No one got anything. Big homie just took $285 million in leases and just bounced. That's not great. He's currently not in the country. He's apparently in Greece watching a soccer match, which seems like a pretty good reason to leave the country during COVID, you know, but you're rich, you can do what you want, YOLO. Basically, the next steps are they need to sort, firstly, they're gonna have to do an audit of every single institutional customer, and every single bank's gonna have to do that too, because I'm pretty confident this guy isn't the only dude doing this in the whole country. So there's a huge issue. The second thing comes back to this broader problem of compliance in large corporations and regulated companies. So the traditional view of compliance is it's like tequila in a cocktail. More's better. You don't have enough compliance, keep tipping it in. Keep tipping that bad boy in, it just tastes sweeter every single time. But much like putting tequila in a cocktail, if you put too much compliance in there, the whole thing's fucked. So in a lot of regulated environments where you have non-digital native higher management, i.e. boomer executives, they don't culturally understand that there's mechanisms you can use for compliance to use data intelligently. What happens here is they're like, all right, we got a spreadsheet, because every corporation in Australia is basically run by a spreadsheet or a piece of software produced before I was born, which is part of the problem. So here you had Westpac customers getting defrauded by other Westpac customers and Westpac approving it and no one realizing. Now, I hate to be one of those guys, a blockchain bro, because I'm not a blockchain bro, but this problem would literally be solved by blockchain, because they just made up a document and scribbled some shit on the bottom and got $50 million. Even if you use DocuSign, DocuSign has the IP and the location and the digital identity of anyone who signs a document. It's insane that no one's using that. Even if you had a blockchain solution, you could just put the contracts on here and see exactly who signed what. This is just another big company being lazy with technology, taking a shortcut because the boomer bosses think that signatures are the most important things in the world. So this also annoys me because they're not using the compliance technology they have available properly. So if you think about the amount of data a financial institution has on their customers, on basically everyone, their behavior, their transactions, where money's going, no one is using that to make lending decisions or compliance decisions. And this is one thing that really pisses me off about the current state of business and commercial banking in Australia. You got a guy, for instance, one customer who I did when I worked at Westpac, he wanted to buy a courier business for like 180 grand, and I nearly had to go over to the credit manager's house and fight him to get it approved. This guy had a house to put up as security, good businessman, they didn't want to do the deal. Yet here we are, giving old Bill Pappas, the dude in Greece, $50 million on the back of a forged invoice. And the only reason it got picked up was purely by accident. Banks have lost the ability to look at lending from a high level and make intelligent risk decisions. You're telling me that the lending book for small, medium business is going to have more losses than this single institutional fraud. Furthermore, the amount of hoops you have to jump through as a self-employed person or a small, medium business to get a loan is phenomenal. And the safe lending legislation that was put in a few years ago hasn't helped at all. That has essentially meant that if you don't need a loan, you can get a loan. If you want a loan, you shouldn't have a loan. I've literally been asked by credit officers, well, if they need the money so badly, we probably shouldn't lend it to them. Yes, we should. That's the point of banking. That's how it works. Anyway, let's go to my second point about the broader culture and lack of innovation within particularly large finance, but also large corporations across